Hello, and welcome to the Q4 RWA State of the Market Recap. This is the third time that we're doing this now at Wallfacer Labs, and please keep letting us know what you think about it so that we will be encouraged to keep working on it. Before we jump in this time, I just wanted to plug some of our other content. Please be sure to check out our Substack and our podcast, which you can just search for pretty much wallfacerlabs.substack.com, and in any podcast player, you can just search for Wallfacer Labs. We've been a little bit slow about uploading these to YouTube, but we will improve. So far, we have about 7 episodes on the audio-only podcast player. For the Substack, we just published an article last week highlighting the return of DeFi yields, showing how Compound, Aave, and other DeFi protocols have outpaced RWAs recently. And on the podcast, we just posted an episode with Piotr, the founder of L2Beat. We have another few episodes in the back catalog that we'd love for you to check out as well. But now jumping into the RWA content. As we did last time, this time we will kick off with T-bills, go through private credit, go through some trends, data, and updates on recent defaults as well. But to kick off, T-bills in Q4 saw a tremendous amount of growth. Another roughly 33% growth quarter, which is very encouraging. I think this actually sort of broke my expectations of what I thought Q4 was when I actually sat down and looked at the data. That said, the growth in Q4 is almost entirely fueled by Mountain Protocol. We'll cover them a bit more in the next slide, but a kind of more general trend that I'm seeing in both T-bills and RWAs more generally is growth being fueled by large targeted partnerships and a smallish number of participants. So with Mountain, for example, Mountain was recently included as one of the yield-bearing assets in the Manta protocol bridge. As you may know, Blast kind of kicked off this trend of bridged assets being used as yield-bearing collateral. So in the case of Blast, for example, you can use SDAI from MakerDAO and Lido's STETH. In the case of Manta, you could use Mountain Protocol or be swapped into USDM in order to earn yield on your funds that sit in the bridge. As of today, about 90% of all USDM is held in the Manta Pacific bridge. Data here comes from vaults via ults.fyi. And as you can see, in the December to early January timeframe, the TVL of Mountain just skyrocketed, sort of coinciding with this partnership with Manta. And as you can see further here, the majority of holders are people who have bridged USDM into Manta's network. That said, once the USDM actually lands on Manta, it is actually pretty distributed. So today, 54% of the USDM held on Manta is held at a protocol called Layer Bank. This is also one of the top protocols on Manta. After that, it's held at 2 protocols called Shoebill and then ZeroLend. But all things considered, the distribution within these protocols is pretty wide. As you can see here, 54% of wrapped USDM is held at Layer Bank, but there's 11,947 holders of USDM, as far as I can tell from this Manta Pacific Block Explorer. So that's actually pretty impressive stats. You see a similar trend with Ondo, where with their new product, USDY, which as far as I can tell, they're trying to move more users over to, right now, 76% of that seems to be held by the Mantle, not to be confused with Manta, but Mantle Treasury. This is, I believe, in order... and then the second address, I believe, is the MUSD, so Mantle USD contract. So that's the 0xAB address. So most of this right now is held in sort of Mantle-related things. That said, I think the situation might actually be a little bit different, as USDY has a kind of 40-day seasoning period or hold period before it can be widely distributed. So it's possible here that what Mantle is doing is just holding this here for 40 days before allowing users to be able to distribute it widely. If that's the case, we'll probably see a wider distribution of this asset sometime in the future. Moving on to Hashnote, this is another of the maybe lesser known but high quality T-bill products that's out there in the market. Today, it is mostly held in this top address here, which is a Cumberland affiliated address. I believe Cumberland incubated Hashnote in some way, shape, or form. So most of this seems to be held with Cumberland. And then in addition to that, Hashnote is one of the flagship partners with Canto as a part of their RWA strategy. I was actually a little bit surprised to see that this supply was lower than I would have thought otherwise. Today, the total supply of USYC on Canto seems to only be about $5.5 million. And then in the second market here, there seems to only actually be 2 holders of USYC collateralizing note in Canto's Canto lending market. Sorry if I mess up any of those details. There's a lot of C's going on there. But I think it is just sort of another one of these things where the trend that we see is big players or big partnerships fueling a lot of the growth, and distribution of holders kind of happening as an afterthought in some of these cases. Another kind of interesting example, a protocol we haven't covered in the past, but probably is worthy of covering, is Clearpool. Clearpool historically has been in the business of having single borrower pools where the borrowers are crypto trading firms. So similar to what TrueFi and Maple have done in the past as well. And today, Clearpool actually has about $30 million, I believe, of TVL. But from what I can tell, at least about half of that is coming from idle tranching and idle best yield products. So if we take a look on the left here, we can see that for idles tranching, so we can see that for idles tranching here that 5 million of TVL coming from idle over to Clearpool, another 2.35 million, 1.61 million. And in most cases, this is actually the majority of the deposits going into these pools. So for example, in this Clearpool Fasanara pool, this has 5.05 million TVL on idle, but the total TVL of this pool is only like 6.2. So what is that, about 80% or so of it coming from idle going to Clearpool. On the left here then, on the right, idle has these best yield products, which are kind of supposed to be baskets of a few different protocols offering users a good yield. As you can see, 6 of 8 of these are made up of Clearpool products. In some cases, they're made up of multiple Clearpool products. So I'm actually kind of not even diving into this when I cite the 50% statistic of Clearpool TVL coming from idle, but clearly a bunch is coming from here as well. Now jumping ahead to Centrifuge. So Centrifuge, as I've talked about in the past, is kind of the harbinger for me of where the private credit market is. As we can see, going across all of their pools, the January 1st, 2024 change only shows green in 2 pools, New Silver and a small change in Block Tower. Now, what's worth noting is that these 2 pools, New Silver and Block Tower, I believe are the only 2 pools on Centrifuge today to still be actively and newly financed by MakerDAO. So it actually is another kind of continuation of this thesis that most RWA activity is coming from very large players, in this case, MakerDAO. Without MakerDAO filling up the senior tranche, or in the case of Block Tower here, the kind of, I believe like majority, but super senior perhaps, tranche of some of these pools, we're not seeing sort of widespread retail or institutional prosumer demand for a bunch of these assets. Also worth noting, in Q4, Centrifuge also launched their T-bill product with the manager Anemoy. I think it started taking deposits in Q4, but only had about 500K to $1 million by January 1st. So I'll start covering that next time around. In terms of other things within private credit, the other 2 protocols that kind of come to mind are Credix. I didn't see any notable changes, so I'm omitting covering them this time around. I think their TVL may be decreasing by a bit. And then also Untangled Finance, as I covered last time, recently completed a very large, over $10 million, I believe, strategic funding round in Q3, but I haven't actually seen any announcements or funds deployed from there. When I tried clicking around their website, I was also unable to connect to the pools. So won't be covering them yet, but maybe in the future. Outside of that, I want to cover some interesting trends. So Goldfinch is someone that I've talked about in the past. It seems like now the team at Warbler Labs, which built the Goldfinch protocol, has also launched Heron Finance, sticking to the bird-themed naming. Heron is an SEC-registered robo-advisor that claims to take advantage of the benefits of blockchain to offer private credit opportunities to accredited investors. The thesis of this is extremely appealing to me. Building a kind of sexy, easy-to-access front end to drive mainstream users to invest in a blockchain-based protocol without necessarily knowing that they're touching any sort of blockchain-based rails. This is very much what Compound, I think, tried to do with Compound Treasury in the past. Also what we at TrueFi tried to do with Archblock in the past. And I think the observation is that this is a lot harder than it looks. One thing that I think often gets overlooked here is that as you add these different layers on, you're also kind of adding on many layers of fees. So in this case specifically, let's just take this Heron example. Heron will need to collect a fee. Right? They're running a business. They're not running a charity here. The manager or portfolio manager that is actually underwriting the credit deals also needs to run a business and take some fees. I'm assuming that this is still running on the Goldfinch protocol under the hood, but I actually haven't seen sort of real details on that. But eventually Goldfinch holders will need to take a fee as well. They actually historically have taken a fee. I believe recently those were suspended, but there's kind of that respect going on as well. And then maybe the last thing to think about here, and I think this is something that we noticed at TrueFi, is that by doing this, you're actually really putting a ton of dependence from the protocol onto one front-end platform. And I think there's a bunch of risks that come with that as well. So, overall, I think this is really interesting. I love seeing experiments like this in the kind of private credit, on-chain credit space. And I'm very interested to see how this ultimately plays out. Hopefully next time around, the Warbler/Heron/Goldfinch team will publish a bit more about how this actually uses Goldfinch under the hood, but I would love to kind of dig into that more myself. Next thing to cover. So Plume Network announced themselves in Q4 as well. In the past, we've talked about Kinto, which is a layer 2 that was or is kind of KYCing the entire chain so that institutions will have a safer place to interact. Plume is also going sort of down this route, but taking a different approach. I would say that Plume, at least sort of in their documentation, actually seems to more explicitly call out RWAs and also seems to maybe introduce some tools for tokenization that Kinto hasn't necessarily done. And in addition to that, Plume is taking a different approach on the KYC as well. So as I mentioned, Kinto is taking the approach of KYCing every user that enters the chain. In Plume, you don't have to be KYC'd to use, say, a basic swapping or a basic over-collateralized lending protocol on the chain. However, it seems more like they are treating KYC as a first-class citizen. So maybe they'll be subsidizing, say, like some number of KYC entrants to try and attract RWA protocols that want to have pre-KYC'd users. But from the perspective of someone working on and building apps in the RWA space, I think this is a very appealing approach. And I do think that it offers more flexibility and can probably attract more users than the fully KYC chain approach. So Plume is definitely going to be one to watch as well. Moving on past that, also some interesting governance proposals this time around. Arbitrum is, in my perspective now, really one of the first protocols to diversify a big chunk of their native tokens into stables with the stated intention of them putting those into RWAs. I think there's been a lot of protocols that have talked about doing this, maybe had something hit the forums, but ultimately fail. It's great to see Arbitrum kind of finally take final steps here. And just for context, the final draft was posted in December 2023 and then was ultimately approved in January of 2024. I think actually the final amount was 35 million ARB tokens, which at today's price I think is $40 million or something like that. So this is going to be a huge chunk of money flown into RWAs, most likely T-bills. In addition to this, Frax, which has kind of slowly been becoming more and more of an active participant in the RWA market, recently approved a proposal to invest $20 million, or I should say up to $20 million of USDC into Centrifuge's T-bill products. So another example of these sort of large stablecoins and treasuries and foundations just sort of moving into RWAs as a place to keep their funds. Mantle, which in the past has committed to RWAs, I think actually recently upped the allowance. So they're now saying that they're willing to do up to about $250 million into stable yield-bearing assets. And then lastly, just to cover some of the defaults that have plagued RWA in the past, Goldfinch has actually made great recovery. So huge kudos to them. On the left here, one of their pools from Stratos, I believe, was the underwriter on this one. With on the 3 Colts loan specifically, it looks like they're going to get full recourse on this from a combination of being able to sell off some of the interest in the loan to other participants, and then also the Warbler Labs team, so the team behind Goldfinch, seems to be stepping in to backstop some of the remaining shortfall as well. It looks like the Warbler team might be putting in about $3 million or so. So good for them for really kind of keep putting that skin in the game. On Centrifuge, they seem to have a couple pools that have been in default, and the community seems to not be getting a ton of updates around. Console Freight seems to kind of be the big one right now. I haven't been following this too closely other than just kind of skimming the forums. So if you want to dig in more, definitely do your own research. And outside of that, that's kind of the end of this. In the future, we're hoping to get these out closer to the beginning of each new quarter. Today's February 12th, and I'm recording the Q4 update. So obviously some stuff has happened in January already. Hopefully we'll get the next one out closer to the very beginning of April. So thanks again, and make sure to check out our other content, Wallfacer Labs on Twitter, wallfacerlabs.substack.com, and Wallfacer Labs in your podcast player of choice. Thank you very much.